While we are experiencing a Bitcoin crash, BlackRock secretly buys more Bitcoin and enjoys the good life, while we are distracted by a lawsuit from the U.S. Securities and Exchange Commission. Not only BlackRock, but many other banks are also secretly buying more Bitcoin. Recent developments in the crypto and finance industry have shown that some of the largest banks, asset managers, and financial institutions in the world are increasingly investing in Bitcoin and Bitcoin-related products. One such example is MicroStrategy, MSTR, known for holding the largest institutional Bitcoin holdings, with a total of 140,000 Bitcoins worth over $3 billion. BlackRock and others have recognized this and started investing in MicroStrategy as well, indicating their growing interest in Bitcoin. Furthermore, this aligns with the timing of the SEC lawsuit that led to a market crash in Bitcoin and crypto. Something seems amiss here. Let's dive deeper into the BlackRock rabbit hole. Essentially, they are not the only ones quietly accumulating MicroStrategy stocks. Interestingly, the chairman of the U.S. Securities and Exchange Commission, Gary Gensler, even promoted a cryptocurrency in 2019. This information is crucial to understand the current situation. Company A, that being MicroStrategy, was probably highlighted because it wasn't Bitcoin. So, what is happening now, and why could we be witnessing a major Bitcoin manipulation? Bank of America, the second largest bank in the United States with a market capitalization of $233 billion and over $3 trillion in assets under management, increased its stake in MicroStrategy by a staggering 47,000% or over 47,000 shares. They purchased over 86,000 MicroStrategy shares, significantly boosting their ownership in the company. BlackRock, the world's largest asset manager with over $10 trillion in managed assets, also invested in MicroStrategy. In fact, BlackRock holds an 8.1% stake in MicroStrategy, worth $156 million, 3 times larger than Bank of America's stake. Another notable institution that invested in MicroStrategy is Fidelity, a company with over $4.5 trillion in managed assets. They increased their stake in MicroStrategy by over 28,000% and now hold over 1% of the company. All these companies cannot officially buy Bitcoin yet, but they are doing it indirectly through MicroStrategy. It is important to reiterate that these recent purchases by BlackRock and others, the 47,000% and 28,000% increases by Bank of America and Fidelity, respectively, have taken place shortly after the SEC lawsuit. Bank of America purchased their Microsoft shares in the previous quarter, early 2023, amounting to over 226,000 shares, representing a growth of over 47,000% compared to the previous quarter. Fidelity also increased its stake in MicroStrategy in the last quarter, acquiring nearly 100,000 shares, an increase of over 28,000% compared to the fourth quarter of 2022. Something seems fishy here. These massive investments in MicroStrategy raise questions about why banks and asset managers are buying its stocks, particularly when they correlate with the price of Bitcoin, especially considering the recent SEC lawsuits and Operation Chokepoint 2.0. Operation Chokepoint was originally introduced by the U.S. Department of Justice in 2013 to combat deceptive business practices, preventing banks and payment processors from engaging with certain high-risk industries. Though the program was discontinued in 2017, Operation Chokepoint 2.0 aims to restrict banks from doing business with crypto companies, focusing on both traditional banks serving crypto customers and crypto-centric companies seeking banking licenses. These actions are coordinated by various authorities such as the FATF, FDIC, and the OCC. Concerns have been raised about banks accepting deposits from crypto customers, issuing stablecoins, offering crypto services, or holding crypto as a significant part of their portfolios. We have witnessed increased pressure from regulatory authorities on these aspects, as seen with Binance. While authorities do not explicitly ban banks from serving crypto customers, it is evident that the issuance of stablecoins on public blockchains is heavily discouraged or effectively prohibited. This has led to the crash in Bitcoin and cryptocurrencies. But why are asset managers and banks buying MicroStrategy stocks, especially when BlackRock has committed to promoting sustainable investments and supporting the transition to a low-carbon economy? One possible explanation is that since there is no Bitcoin ETF in the US, buying MicroStrategy is the easiest way for some US investors to gain exposure to Bitcoin, given Bitcoin's superior performance compared to other assets, including stocks and precious metals. These investments come to light at a time when the Bitcoin price has fallen by 60%, suggesting that these banks anticipate a recovery in the Bitcoin price. It is quite timely that the SEC lawsuit has come about, as banks and asset managers likely want to fill their pockets and gain more control over Bitcoin. In fact, A bank with $700 billion in assets recently predicted that Bitcoin will reach $100,000 by 2024, more than tripling its current price. In summary, the massive investments of these banks and asset managers in MicroStrategy, and indirectly in Bitcoin, signal a significant institutional interest in Bitcoin and cryptocurrencies in general. BlackRock is one of the world's largest investment firms and manages a vast amount of assets, giving them considerable influence over the companies they invest in, such as exercising voting rights at shareholder meetings. The question arises, how much influence do they have over institutions like the U.S. Securities and Exchange Commission? It is suspicious that they started buying more Bitcoin, gaining more access to it, and shortly after, a lawsuit from the SEC against crypto exchanges emerged. We know that asset managers like BlackRock are invested in banks, which also have a significant interest in Bitcoin. We must question whether something is happening here to secure the bank's interest in Bitcoin. The situation raises concerns about the extent of influence these banks hold over institutions like the U.S. Securities and Exchange Commission. It is intriguing that they began purchasing more Bitcoin and gaining greater exposure to it, only to be followed shortly by a lawsuit from the SEC against crypto exchanges. Additionally, we are aware that asset managers like BlackRock are invested in banks, which also harbor a significant interest in Bitcoin. This begs the question, is something transpiring here to safeguard the bank's vested interest in Bitcoin? These developments shed light on the intricate dance between financial giants and the crypto industry. While official channels may restrict direct Bitcoin purchases, these institutions have found alternative avenues to indirectly acquire exposure to the digital asset. By investing in MicroStrategy, which has a strong correlation with Bitcoin's performance, they tap into the growing potential of the cryptocurrency market. The allure of substantial returns is a driving force behind these institutional investments. Even amidst market turbulence and price fluctuations, the belief in Bitcoin's long-term value persists. A renowned bank, managing a staggering $700 billion in assets, has boldly forecasted Bitcoin surpassing $100,000 by 2024. Such projections have further intensified the allure for banks and asset managers seeking to maximize their profits. In conclusion, the significant investments made by banks and asset managers in MicroStrategy, as a proxy for Bitcoin, serve as a potent testament to the escalating institutional interest in cryptocurrencies. As one of the world's leading investment firms, BlackRock's substantial involvement in this realm exerts undeniable influence. Their vast wealth and extensive asset management capabilities enable them to wield considerable power over the companies they invest in. The intertwining of their interests with those of regulatory bodies raises valid concerns about the potential implications on the crypto market. Amidst these intriguing developments, it is imperative to closely monitor the actions of financial institutions, their investment strategies, and their influence over regulatory decisions. The evolving relationship between traditional banking systems and cryptocurrencies continues to shape the future landscape of finance. As the crypto market matures, the dynamics between institutional investors, regulatory bodies, and digital assets will undoubtedly shape the narrative of this thrilling chapter in financial history.
Thank you for watching. Don't forget to like and subscribe for more great content in the future.